Hi all, welcome to Mirae Asset Sharekhan's Sector Quarterly Review. Here we decode earnings, trends and opportunities for today's smart Indian investors. Let's break down on what the latest number really mean for your portfolio. Today we'll be talking about the banking sector that has just posted record profits in Q2 FY2026. Also, they have got a regulatory push from the Reserve Bank of India and it is looking set for a healthy overall performance going ahead. Now let us continue with our sector review. The first point is positive regulatory changes to fuel growth. RBI has made important regulatory changes as it has removed 10,000 crore lending cap for corporates, allowed banks to fund up to 70% of M&A deals, raised lending limits against listed debt to 1 crore and increased IPO financing to 25 lakh rupees. What does this mean? Banks can lend more, take bigger deals and earn better. Plus, the 100 basis point CRR cut releases 2.5 lakh crore of liquidity, giving the banks the fuel they need to grow faster. Second point is highest ever quarterly profits. Banks in Q2 FY26 delivered their highest quarterly profit in history at around 97,400 crore. This was led by PSU banks with 11.2% growth in net profit, while private banks took a mild blip due to few names dragging down the overall average. NII, that is the net interest income growth, was modest, but here is the big takeaway. The overall stress is easing. Unsecured loan slippages are stabilizing and GNPA levels have dropped to 2.1%, which is best in several years. The third point is overall asset quality improving trend. GNPA levels fell across the board. For PSU banks, the GNPA improved to 2.34%, while for private banks, it improved to 1.79%, and the sector's net NPA dropped too. This means fewer bad loans, fewer provisions, and more profit staying with the bank. The real beat, H2 FY26, looks even better. Most management commentaries and data indicates that NIMs have bottomed out. However, with recent rate cut by RBI, we could see some pressure on NIMs in Q3, but Q4 onwards, the margins should stabilize and start improving thereon, as deposits will get repriced and the impact of CRR cut will kick in. Credit growth has already crossed 11%. With tax cuts, GST reduction and good monsoons, the lending demand should pick up even more. Foreign money is coming in big. Global investors are loving Indian banks right now. SBMC has picked up 20% stake in Yes Bank, Emirates has bought 60% of RBL Bank, and Blackstone has took 9.9% of Federal Bank. Plus, major names like SBI, PNB, BOB, Canara Bank, HDFC Bank all have received rating upgrades recently. When foreign money and rating agencies both turn positive, it usually means that the sector is on a strong footing. Our preferred picks include HDFC Bank, ICICI Bank, Axis Bank, SBI and Bank of Baroda. These banks combine strong financials, improving asset quality and healthy growth outlook. So that's our fast and clear recap of the banking sector. The big takeaway is record profits, cleaner balance sheets, regulatory tailwinds and a promising outlook for the sector. Thanks for watching and please check out our full report from the description for an in-depth analysis. If you found this video useful, don't forget to like the video, subscribe and share it with anyone tracking banking as an investment theme. We'll see you in the next sector review. Thank you for watching.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.